Some of the more traditional choices for defensive asset allocation include cash, obviously. Term deposits is very common. People allocate to term deposits to protect their capital. Quite commonly, people invest in government bonds, either directly or they'll actually invest in a traditional fixed income fund, which has a lot of embedded government bond risk in it. And the Australian market, it's very common to buy listed hybrids issued by the local banks. People love allocating to those, thinking that it's a relatively defensive asset class.
In the defensive part of investor portfolios, investors really should consider absolute return fixed income funds because these funds provide positive returns with low volatility in most market environments, and we think that that's something that's really important for this part of investors' portfolios. The other thing that's important about these funds is that they tend to not follow fixed income market benchmarks. Now, many funds do, and these funds therefore tend to be exposed to risks like interest rate risk that don't make a lot of sense in this part of the portfolio. Instead, you want a fund that touches on a lot of different sources of returns. If you're getting sources of returns from all sorts of different places, then you're going to end up with a smoother return profile through time.
There are probably three distinct advantages with respect to an absolute return fund versus cash and deposits. The first one is liquidity. The way term deposits are sold these days, you actually have to oftentimes wait 30, 60, 90 days to get your money back to get any sort of decent return. That's probably not necessarily a liquid investment, whereas with an absolute return fund, you can get your money back in 2 or 3 days. Diversification is another argument. You often go down to your local bank and you put a deposit down and you think it probably is a safe institution, but just keep in mind you do have significant exposure to that one institution, whereas with an absolute return fund you get much better diversification. And thirdly, returns. You can get much better return profile with respect to an absolute return fund versus cash and term deposits.
There are 3 key advantages of an absolute return fixed income fund over traditional fixed income funds and also instruments like hybrids. The first one, with relevance to traditional fixed income funds, is that these funds tend to not run a lot of interest rate risk. Now, interest rates are so low at the moment, it doesn't make a lot of sense to run a lot of interest rate risk in your portfolio at this time. By contrast, traditional fixed income benchmarks do tend to run a lot of interest rate risk, and so we think absolute return exposures make a lot more sense right now. The second, thing that we can point to is particularly with relevance to listed hybrids. These securities are listed on the Australian Stock Exchange, and embedded in them is a lot of equity risk, I should say. Equity risk is clearly not something you want in the core defensive part of your portfolio. When equities fall, this is the part of the portfolios that's meant to be protecting you, and so hybrids are not fit for purpose there. The third point that I'd make is that active management in fixed income is really, really important. You have such a wide opportunity set in this market that you really need an active manager to ensure that you are touching on all the potential sources of return that you can access. We've talked also about the need to generate returns from multiple different sources. That means in interest rates, in credit, in other parts of the fixed income market. Individual investors aren't really set up to do that. An active manager can make those really important decisions for you.
One way to get exposure to this is Daintree Capital offers the Core Income Trust. That's an absolute return style fund that's targeting 1.5% to 2% above the cash rate on a rolling 3-year basis. We've just finished our first 12 months of performance. We've been very pleased with both the absolute and relative performance. Importantly, we've had positive returns every month, despite the fact there's been quite a bit of market volatility over the past 6 months. Also, we've had a good result with respect to the researchers. We've had some very good ratings. Most recently, we received an approved rating from Zenith, which we're quite happy with, given the fact the fund's only been going for about 12 months. So we think the Core Income Trust is certainly worth considering for your core defensive asset allocation.